5 minutes. So let us first understand, as we have seen, there are various ways to take a trade. Now this is a nifty chart of Ichimoku. Now if I want to take a trade, what is the minimum view? What I need to see is, say for example, I am looking for first the transition of the market, or at least the market to form one higher top or higher bottom, or a time required by the wave to break the correction. That is, if this wave from here to here have taken say 10 minutes, say for taken or 3 hours, then this should take less than that and then break this. If it is taking more than that and then and not breaking this level, more than this and not breaking this level, that shows the market will break this high. So how can we use Ichimoku? So first signal, this wave has went up, then it was in a consolidation, and the first signal after consolidation is when the price cutted the blue line. So price have here cut the blue line. Now after cutting the blue line, the red line has also cut the blue line, second signal. So when I now see my Chiku span, that is green line, it should be above this price, that is third, and the fourth signal is above the cloud. So all the conditions are satisfied, so that now we can take a trade keeping either a close below the cloud or below this Kijuswen, that is blue line, as a stop loss. So this is the way you can enter in the market. Now let me tell you when will the market will reverse. So now you will find here market is forming lower top and lower bottom. Market is forming lower top and lower bottom. This bottom was broken. Now this is the wave. Now market has went up. Now what is the signal on Ichimoku to take a trade? First signal, price should cut blue line. Second signal, Chiku span should be below the price. So somewhere here the price is below. Third signal, the red line should cut the blue line. When all the three signals we get, we can initiate the trade. We can buy X quantity here and X quantity when it breaks the cloud. That is how you can divide. And a close above the blue line can act as a stop loss. The moment the blue line becomes flat, some amount of profit booking can be done, and remaining profit booking can be done when red line crosses the blue line, or when the price cuts the blue line. So this is the way the Ichimoku cloud can be used to judge the trend. Always remember, the primary trend has to be judged from higher top, higher bottom, lower top, lower bottom, and then if you will use the Ichimoku, it will give you very good entry to enter in the market. Now you see here, this market was going down, down, down. Now the first signal of higher top and higher bottom, and now from here market is going up, then it has come down. Then the first signal after it is coming down, the first signal, it has already opened gap up. So all the conditions are satisfied. Chiku span is above, red line above, Kiju span above blue line, above the cloud. So this is the good area to enter. Now suppose somebody has not entered this, so let it fall down. Let it fall down below the red line, and then whenever it crosses the blue line or red line, that is again a good area, because all the conditions are satisfied. The more and more it comes towards the cloud and then rises, they are the subsequent entry to enter using the Ichimoku cloud. So this is the way the Ichimoku is used on minimum time frame. Now sometimes if you want to take the early entry, then using Fibonacci tools, first you decide whether the market has achieved certain targets. So for example, if you use this, Now you know market has achieved 161%. So after market achieve 161, let the first signal come, that is let it cross the blue line. Then the second signal will come when the red line will cross, and then till the time the red line is below or the previous swing top is not broken, you can continue with the trend. The next trade can be taken when it cuts down the cloud. So this is how you can combine the other tool, but the entry can be taken once you get a confirmation on the ICHIMOKU. ICHIMOKU is the complete indicator to trade. Now once the market has fallen down, how will the market will reverse? Again, in order to reverse, first it will cross blue line, the price will go above the blue line, then red line is above, and now if it cuts down, this is the gap up opening, so this entry you won't get. But now after the gap up opening, it comes down to the cloud, then it goes over to the blue line, then the red line crosses the blue line. That shows the indication. But here, if you will go here and see the price, Chiku span is below the price, so that is not a good entry. So let the Chiku span goes above the price, so somewhere here you can take the trade and then you can get a good entry. So this is about how you can take a trade on 5-minute chart using ICHIMOKU. Now you see this was a fantastic entry. The rally was from 8940 to 400 points rally. Now here also the rally was from 9340 to 9840, 500 points rally. Here when the market fell, the rally was from 9400 to 9100, again 400 point rally. So when the market, now this is very good to analyze. Now here the market has gone in the sideways mode. If you can see here, the market is in the sideways mode. Just now you see here. So market has gone up, then it has consolidated, and now how to decide कि market will move up or down. So now we know this is an impulse wave and this is a corrective wave. The first entry when it crosses above, Chiku span is above, red line. See, first entry, three conditions should be satisfied: price cutting blue line, red line cutting blue line, Chiku span above the price. When the three conditions are satisfied, first entry can be taken. Now this was a very good opportunity because after a impulse, correction was there and then we got an entry. Now again you see this is an impulse and this is a correction. So the entry can be taken somewhere here or here and the stop loss can be kept here. So this is the good way to take the trade. And once you get above this, the price goes above this, the moment it closes below the blue line, you should exit. That is how the rules are. Now if you want to trade this downfall, the conditions that needs to be satisfied is it should first meet the Fibonacci targets, and when it meets the Fibonacci targets, that is it meets the Fibonacci target somewhere here, then when you get the first signal that is closing below the blue line, and then when you get a signal keeping this high as a stop loss, you can trail the profit. That is how, if you want to trade over the upside zone and combined with ICHIMOKU, this can be used. So this was all regarding the trades on the 5 minutes, and we have seen we get very good trades on 5 minutes. Good up move. This is up move from 9,000 to 9,500. This is up move from 9,500 to 9,800. So you will find very good up move more than 500, 600 points only based on ICHIMOKU. You will find down wave also 500 points and you will find up wave also 500 points. So ICHIMOKU is a very good indicator to take a support for the trend of the market. Now we will see the analysis on 15 minute.